Welcome, everybody. How are you doing? Good to be with you. To be with you is good. Glad to talk to you on the following topics. I'm going to make sure I follow myself on the phone and make sure it's silent so that I share screen when I'm supposed to. It's always so much more productive. So let's get straight on with it. I've got things to show you. I have got things to show you. What do we want to talk about? Well, there's a couple of things we might want to be talking about. And here's a few of them. So we've been warning inside our community that even before gold had its correction, that there was a point coming shortly for the dollar index, that it was going to get a little bit of bid and it was going to cease to slip down. That's right, a little bit of a point where the dollar would get a little bit of bid and cease to continue slip down. So I'm going to talk about the dollar index and also our chosen pairs for where that is likely to manifest most as well. So we see weakness on the Korean that could be epic and part of a geopolitical event. We've spoken of the USD Korean won before. You will have heard it, and we've said this is a mega trade that is coming. It is coming around the mountain when it comes, and eventually it will come. And we're of the view that that moment is drawing very soon. So we'll be talking about that. Also, how far does the USD go against the JPY? So we're going to be talking about yen-based weakness and reminding you that the yen is the wholesale funding factory that is sending over cheap currency for Casino America to sustain their Ponzi scheme, much like the Cayman Islands and the basis trade, many other things, cheap borrowing in yen. Nobody truly knows how deep the carry trade is. And as we're finding out, Ponzi's are pretty big and they're all over the place when it comes to the United States, and they're often a lot deeper than people imagine. So my guess is most people are not really thinking about how deep the yen trade goes. Also, according to this title in our YouTube channel, we're going to be talking to you about something else. We're going to highlight our Australian friends. Any Australians in the audience? It should be getting close to early morning time for our New Zealand and Australian audience. We're going to be pointing out to them that the Aussie 10-year, which is probably the basis for all their mortgages, it is for the Americans, is about to creep significantly higher. We've been talking and sharing this for a while inside our X. Don't forget to follow us on the Market Sniper on X, also the Crypto Sniper and the Reset Sniper. You'll have a hat trick of feedback streamed by content if you do. And we want to warn Australians, your mortgage prices are going higher, higher, higher. And then actual fact, even though generally we are biasing to debt devaluation and interest rates up in the longer term, that Australia is particularly vulnerable at this current moment. Now, we've spoken about Europe, we've spoken about UK. They're all vulnerable. 2 degrees will go past them. They've flared up. The US 10-year is turning. So we'll have a look at those charts when we pivot to share screen. And what else? Gold. Well, you know that we're a very bullish channel on gold. And you can support us by supporting our bullish providers on gold, such as Pure Gold in the link below. I buy from them and have done for many years, and also ITM trading on the links below. And most useful for now, Bullionvault, especially if you're thinking about moving around and maybe relocating. I've got something to tell you about the G7 and relocation. Remember, this face is the one that says the unpopular things when no one's ready to accept it, like leave the West. G7. I've got something to show you in terms of that as well during this live stream. So we've got quite a lot of work to do. We're going to talk about what I still think is another sell wave, a selling leg or wave down for gold to the downside. So if you're enjoying the fact that we're doing an odd hour stream, hopefully getting to an audience that doesn't normally pick up with us, hit the like button. 35 of you have done the like. Let's go have a look at some of those charts. We'll start with the Dixie. Share screen now engaged, he says. Share screen now engaged. And let's go straight over to that chart. So that's your dollar index. If you're a regular watcher of our stuff, you'll have seen it. Let's unveil some of the lines, the magic lines. The magic lines that do get drawn. The magic lines is basically reduced to the following ideas, that you are, since the 2008 crisis, huge crisis, obviously seminal event. It was a depression. Let's be clear. It's a depression. The Great Recession. They always lie. They never want to tell you what it truly was. It was systemic bank failure and 2 years of negative growth. That should have been a recession, but some numbers were 0.1 and weren't quite the 2 years. And some admit that they bailed out banks and they never actually went bust. Well, it was a Great Depression, friends. It was a Great Depression. Anyway, since the Great Depression, we had peak dollar. This is your channel that we've drawn for you. That's the basing ascending grind line, and we've highlighted the orange levels, the top of the channel and the interaction with the 100. The blue dashed line is 100. You can see it there. There you got, again, interaction with the top. You had the super spike. That was the CV19 that ran the 100 and then collapsed. So that's a flush out. We often talk about this technically. A massive rip in one direction to then collapse in the other. It's designed to destroy retail traders, I would say, as a trade event. So first, all the fear ran into the dollar. As the dollar was getting all of this bid that went into their bond markets, what did they do? They pumped so much money into that and weakened the dollar so incredibly and bailed out European banks, their own banks, everybody. People don't know that it was a bigger bailout than 2008, the subprime bailout. How about that for an instance and fact? 20 plus trillion went to a variety of banks, including non-US banks. Anyway, back down here, you interacted with the basing ascending grind line. That is the channel along the bottom. And recently you've done that too over here on the monthly time frame. So let's go and talk a little more about the more recent stuff. Inside of this, by the way, there was a little bit of price behavior that was super, super interesting. Some of you might have noticed it. So we're going to zoom in on the more recent stuff. We'll say goodbye to some of the older stuff. And I'll highlight to you that we did, in fact, so that we can do this upside HVF draw. So what you'll notice on this time frame, and we've shown this one before, but some people might be seeing this video for the first time. So there were those interactions with the 100, and then with the top side of the channel, there was the interaction with the 100. Here was a left shoulder, a tiny right shoulder, and then an M head. Yeah, you have it, and there was a triggering event that got made as a target. And of course, it set up this upside HVF that set up that triggering event, to which we called 112.7 on the Dixie to happen. At this point, as the 112.7 was made, all the Dixie maximalists were calling for 130, 140, and a whole bunch more, because there's nothing like momentum to get a bunch of dogs chasing a car and barking their head off. But God forbid that car stops, they all go a little bit sheepish and quiet and go away. This is the value of true H method and targeting. That was the top. It also intersected with the top end on its marginal overperformance to our target on the top end of that channel. From then, it fell very badly. We biased bullish, actually, incorrectly so, during this period. Around the bottom, you had another dip, interaction with 100, interaction with 100. It then rallied there. We said, yes, okay, the smile's just, the watermelon smile has just extended a little bit. And then it got absolutely slammed at these levels and came down. It broke the 100. It then met both our funnel. This is a legacy funnel of a performing HVF, as you can see, and started to support. We highlighted this hammer before and said that is a basing, another orange zone of significance on the Dixie, which actually points to the Dixie getting firmer. Inside the community, we have been trading the USD Japanese yen long, the USD Korean won long, in the possibility that we might have a little bit of upside in the dollar. It may get disorderly. It may just creep and grind. We don't know. But it's a great hedge. It's a great way to make a little bit of money while I get one more time tested with a selling leg. Does it make a new the gold chart later on in the video? All my bullion friends, it's coming. Stay till the end. Okay, so we got the support on the funnel and we are now approaching the 100 mark. You're actually at 99.99, 99.92 at the moment. So this is going to bump into this. And the last time you got rejected, but I anticipate to break over the 100 at some point. And maybe in this instance, you may pull back one more time and easing into a triangle here. Let's tidy up and draw that triangle, the base and the 100 level. So the expectation for me is that you'll get some type of airplay above the 100 and probably stay above the basing ascending grind line. That's this one along the bottom here for a period longer for now. For now. That's not forever, but for now. Do I think it will rip as fast as it came down? I'm not entirely sure that it does. I think it's going to be more grind of price behavior in this range. There was a lot of price behavior. It's quite a heavy range, and it is around for that. Let's get out and do what's the reading for that. It's about 105 and a half. 101 to 106. It was quite chunky. It was quite chunky. You did stick a nose out the top once or twice, and you did stick a nose out the bottom. You were generally 90% in that range. So I think that's going to be an interesting area. What does this mean? This means that there's a little bit more of a front-end pressure on Bitcoin. Yeah, there's probably some crypto guys in the house, and crypto generally, not just Bitcoin. Also a bit of front-on headwind for gold, hence the third sell-off, which we'll come to, and precious metals generally, which will affect silver and platinum too. And also, on top of all of that, the chance to actually make a little bit of outlier strength on the dollar versus other currencies that are slave nation currencies. In other words, they kept cheap to keep the dollar good. You've got to recognize Japan just got a new PM and she's going to be super dovish. What does that mean? That means the yen is going to die. She's not going to up rates and the yen is going to be allowed to die. They don't want interest rates too high. Your real story, guys, the real story here is about debt-based collapse. You're in a debt-based collapse. So having dealt with the Dixie, let's go talk about that debt. Let's have a look what's happening on the US 10-year, first of all, before we pivot to our Australian friends and talk a little bit more there. We'll clean our face as well. You see, you got a rate cut this week, friends. And what's actually happened is rates have gone up. They've gone up. You've come down to the 4%. You did a technical trade through the 4%, but rates have gone up. And here's the reason why. The Fed was actually rather hawkish in cutting. They said there's no guarantees at all that you get a cut in December and that the rates may be a bit high for the job market, stagnation of the job market, but they're also a bit low for the inflation. Remember, they set the target of 2% and they're sitting at 2.7. So quite clearly, to be cutting at 2.7 when your target's 2 is also the wrong in monetary policy for inflation. And we've done the big lie regarding the labor stats, and the focus has been on the stagnation and the recession in America. The big lie on CPI, the great lie, is going to start coming out, and there's going to be even more concern that all stats from government is in fact propaganda. That's right, friends. I'm looking at your comments on the stream. Nice to hear you. Connecting issues, buffering, I hope not. Stay with us. Let's do a quick speed test and check. It was all pretty decent when I started. Let me know if you're still hearing us loud and clear. It's looking decent on the download. It should be decent on the upload. So what else do we want to talk about? We're going to talk about the TLT as well. We're going to talk about the TLT, but rates are heading higher on the US. And that is also debt down. Remember the inverse seesaw relationship, debt goes down. So we want to talk about the TLT, which is the value of bonds. So if rates up, debt down, what is this long-term ETF looking like right now? Now you may recall we were behind the earliest technical short call on the debt markets way back September, October on an inverted HVF that predicted just about every aspect of this collapse. We said an outperformer, and if you get down to this level, we even predicted the right shoulder. You may get a bounce for a right shoulder. It was a bigger right shoulder than we thought. And then we said you will make the target. That target was made. This was a huge debt devaluation. This is long-end portfolio of bonds of America that is devaluing. I can see my body and handsome face is hiding the chart. So let me just pull that around there. so that you can see where we are today. Where are we today, he says? Well, today we're having a turn down in the debts. This is on the weekly, but let's just go normal weekly. You've actually had a gap down on the TLT. You've had a gap down on the TLT, and this is known as a broadening structure as well, which points to typical continuation. You've had a tightening structure there. There was a rising wedge, and you broke down, return moved down, and you made that low. This is now a grinding, broadening structure, and we would expect you to come down and at some point break the lower dotted red line over there. So that means, yes, your dollar may get stronger and everyone's going to be the maximalist, the people that are China fatalists. China is wrecked, they always like to say, and there's amazing support for dollar-denominated assets in the recent treasury auction. They never talk about the Cayman Islands margin basis trade that has drained all the capital out of the repo markets. Hedge funds are now one of the largest. 37% of foreignly held bonds are held by hedge funds, leverage hedge funds, and a huge amount of them are sitting in, you guessed it, the Cayman Islands. Not all of them, but a whole bunch of them doing the basis trade, which is a very marginal return trade, which only delivers a semi-decent return if you incorporate a huge amount of volume, which means you have to be a massive buyer of treasuries and a huge shorter of futures. Until that trade hits backwardization, which is when futures don't start so low, they go higher instead of coming back down by the time of delivery date. Anyway, don't get lost in the weeds of the technicalities of that. If you want to know more about the basis trade, you can head on over to our Substack. Yes, go search The Market Sniper on Substack and you can find it. And that article is actually a free read. You can see all you want on that. By the way, don't forget, if you want to become a community member, a lot of what I've been sharing and discussing has been discussed a lot longer before inside our community regarding the dollar strength and how we intend to make a little bit of alpha out of potential upside. So let's get to some of the trades that we might be taking. Let's get to some of the trades we might be taking in terms of any point of dollar strength. Now, dollar strength is not going to be like as reliable and as trustworthy as gold strength has been, which went into a beautiful parabola. We are coming to the gold chart by the end of this video, so don't worry. But let's have a look at what I was discussing, the USD JPY. First of all, let's start with the USD JPY as one of our leveraged trades that we currently have on. So we were always maintaining two views on it and said, let the market tell us which one it is. We highlighted the very low volatility in here for an extended period, our beautiful shooting star followed by a hammer. Now, they aren't really shooting stars or hammers. They're inside a very tight range. They're not at a localized high or at a localized bottom. They're known as kettle drumsticks. We named them. It's unique to us, and it's very associated with low volatility periods, like walking through a tunnel and touching the ceiling and finding the floor. You get what looks like a shooting star and a hammer in terms of range testing candles when there is low directional bias. And this sets up what we call the low volatility moment. So we were saying one of two things will occur. This will be an upside squeeze to the higher side. Squeezy, Japanesey. You don't get it any better than on the yen with that trade. Or it could be some form of complex head and shoulder structure, which could have been down, which we've left the draw on to the downside on. As the market then shows you, we let the market tell us, which one are you? Which one are you going to be? Any major sell-off will have us concerned about the carry trade unwind. Yep, looking at your comments as they come. Someone wants to know, is alt season happening? Wait for us on the crypto markets. We will talk on the crypto markets for that. Good to hear you, mates, says Tulani Celia. Good to hear. It's a funny thing. Two honest men can do meaningful transactions when their basis is truth. No gold required. Yep, honest people. We need a high trust society, I would say. And you don't tend to get that as much when you do too much of the clergy plan immigration, as brought to you by your local Zionist, who says must help foreign man. Yep. Anyway, let's leave high trust societies for another day, shall we? Let's stay with the technical charts. This is a triggering break here that occurred. We've made our first interim target that's over there, and you might get a little rest and a pullback. So, by the way, that doesn't mean whale in right now. In fact, in every instance, you want to use limit orders generally, unless it is just about to do a triggering event. So a limit order would see you maybe getting a bit of a deal. Negotiate, have a little haggle with the market, be prepared to wait. If we get a pullback somewhere towards here, you can't even come all the way back to the green line. I can't tell you how far it'll come back, if it comes back at all, but it may provide an opportunity for you to get in a tiny bit better. And then 172 is us. That's what we want. 172. Let's put some alerts. They're free. Why not? Let's have as much as we can on anything that's free. There we go. So that's a bit of a move that's going to be pretty decent on the dollar dominance against the yen. But I spoke of the good old Korean won. Now, many of you will go, oh, but I can't trade that anywhere. Well, by the way, I'm trading it, and I have been trading it, and I provide brokers that do it in the links below. SimpleFX. Right below, easy to do. You can use crypto, USDT, or normal funding methods. You can trade traditional markets and crypto markets. They have the Korean won. I also provide links to Scandinavian Capital Markets. They have the Korean won. It's in the links below. Don't say I can't trade it. You can. If you want to, you will. Let's have a look why it's interesting. What if you needed to open a trading account to trade it? Would it be worthwhile? By the way, this is non-recommendation. I'm just talking to you about things that I like in the markets right now. So let's go and draw the Korean won. This is a very big time framer. That's why you've heard me mention it before. They take their while to come around when you're on the big time frames. And this is a big time framer, friends. But when it gets moving, it's going to move. By the way, the precious metals are also big timers. And look how they've moved. Don't frown and wonder or worry. These are big moments and big trades when they come. This was the first upside HVF, by the way, some time ago, and it predicted the Asian crisis, and it gave a super spike all the way up to here. The target was 1,057, and in fact, by it finished, it went 1.8. 80% beyond target. So when the Korean won goes X bid, it goes mega X bid. If we are to have strength on the dollar and end up facing a bit of a dollar squeeze fundamental that could put pressure on other currencies, this is that pair to be trading. This is that pair to be trading. Now, the traditional entry for this trade is in the green line. It's very simple. It's in the green line. Let's say goodbye to our original HVF that predicted the 90s, the late 90s, 96, 97, 98, Asian crisis. Wow, what a crisis it was. Look at how those currencies moved. Man, fortunes were made and lost at that point. Remember, real opportunity potential is happening when these moves happen, and the Korean won gets schizo. It gets very schizo. It doesn't have the huge depth that maybe the yen would have, doesn't have the same power. Look at those moves. And then more recently, we had that move that set that high as our break into this trade. I've done it in blue as a key level on top of the green line to really make it pop. And we are coming ever so close on the 2 monthly period. So that is not quite a quarter, it is 2 monthly. It's a bit of a monthly. There you go. That's your down leg. That's where your long stop would be. You had a squeeze of a rising wedge that did a test. We call it the break and feign back in, and you feign back in. That is stage number one. You will learn that in our theory in a fun way with me, in a beautifully presented with slides, real detail. We care for how we've done our content to a very high standard. The 5 stages of a breakout. The first one, break and feign back in. The second one is break and make the first interim. Now, the first interim is this mildly dotted line that you can just spot over there. Once the 1582, there's the purple number there. The next purple number, 2,109. The next one, 2,740. By the way, when I say 2,740, this one went 80% more. In fact, the overperformance was far larger. Why am I saying 80%? That can't be right. You went 80% onto the number of 1,000, but you were going from around 700 to 1,000. So that was about 300, call it one that you gained, which was huge in pip terms. It's probably 30,000 pips. But in actual fact, the eventual move that you got would have given you a further 850 odd onto that. So it would have more than, was probably for 2-3 times your return. Now, I can't tell you it'll overperform by the same amount next time, but I will only close 50% on that number. And I think you might get a blow-off shoot number that could get really, really ugly. That's what happens. Hi, Francis. I'm a Canadian visiting my cousins in Europe and planning to go to Tbilisi next week to try to get residency. So you have any connections to help with the process? Thanks in advance. We certainly do. We certainly do. And what you should do is email us on support@themarketsniper. We have a very nice gentleman who looks after us very well and who will be purchasing property for me. And I will trust him so much, I will be giving him a power of attorney to do so. In absentia, he will purchase a property for me. How about that? How many people out there are prepared to do that? And it's not an insignificant sum either. Real opportunities in Georgia, that's part of our reset preparation. And we actually have for you, thanks for your question, by the way, a little sidebar moment while we're live streaming. We actually have for you a relocation plan B coach, a plan B relocation coach. Yep. If you are sitting, let's do this now. If you are sitting in a Western nation and you do not have a plan B and you do not have someone of sound mind, who are well informed to be your guide through an entire process, more than just a single call, but maybe 5 or 6 such calls and check-ins, you are in trouble. What am I referring to? Let's talk about the West and let's talk about the G7. Thank you for your question, by the way. We're taking an interesting journey. The Guardian in the UK says the following: Rachel Reeves considers 20%, that means it's not yet done, she's considering, they are desperately short of money, 20% tax on assets of people deciding to leave the United Kingdom. Just think about that for a minute. You've paid your taxes, you've paid your car duties, you've paid your petrol taxes for driving your car, you've paid heating taxes, you're paying death taxes for dying to give your money to your children. And for changing country, they want to tax you again on already taxed income. And they want 20% tax on all assets that you leave in an environment where many people will be selling their property, selling their cars, selling their everything that isn't nailed down to the ground in the United Kingdom to start a new life somewhere else. And they'll say, have yourself a great big fuck off haircut. Now, in my case, there's not much to cut, but boy, 20% of your assets, that sure is mighty and meaty. I would not be declaring leaving. I would leave first. And then once having left, I would declare that I have officially left and closed all my bank accounts. That is not a tax I would have any shame in not paying. But hey, I'm kind of that way. You see, there's a difference between morality and legality. They can make it illegal for you to do that. It sure as hell doesn't mean what they're doing is moral. And here's the thing on some of what we talk about, by the way. I'm super glad about taking this little sidebar. Thank you so much for the question on Georgia. It's properly, we've got everything you need. Email us on support@themarketsniper with the best people. Let me go on this. If you are not planning a plan B, and you do not have a relocation coach or someone you can turn to who trusts, who doesn't have any agenda but seeing you end up in a better place, you will fail. If you want one and you want to have that conversation and you want to be guided through a process in an impartial manner, you book a call. You can send support@themarketsniper and book that call. These people are coming for you. I have said the most unpopular things on YouTube that I know are downvotes and unsubscribes and everything. I've told people in the West for 2.5 years, 3 years, maybe 4 years, I don't know, you need to leave the West. You need to leave the West. And here's what's happening. When the debt markets are busted and they can't raise money to overspend and inflate you away, which is what they do in normal times. They get a certain amount of income in, they spend a whole bunch more. They use the Ponzi-onomics of a debt market to create a system that allows them an overdraft. When they can no longer tax you on the sly, when they can no longer tax you on the sly via inflation, by overspending. Milton Friedman told you, excess government expenditure is inflation. You're putting that extra on the debt market, you're proliferating, you're borrowing new money into existence with an interest attached, which requires further new money to make the payments, which ensures dilution of your money, which puts you on an ever climbing escalator into higher tax brackets, greater taxes, and the cost of living ever going up. In that environment, when they can no longer do that trick on you, they can't pretend and do the sleight of hand friendly taxation racket. They go more aggressive. They have to tax you direct because the debt markets won't allow any more Ponzi-onomics, or not to the same degree that they've previously done. So when facing a debt-based collapse, governments go into tax scavenge mode. We designed the phrase, we said the phrase, we will share it on Twitter, the full definition for you, so you have no idea, no doubts about our position. But we have continued to warn you of exactly this, and you are witnessing scavenge mode in one nation warning, in fact, that's it, would follow policy in place amongst other G7 nations. Watch and read it with me, friends. Plans for setting up charge predicted to raise 2 billion and would follow policy in place amongst most G7 countries. Who are the G7 countries, you might ask? Well, my Australian friends, I've not got good news for you. You're one. My Japanese friends, I've not got good news for you. You're also one. My American friends, I don't have good news for you either. You're also one. Oh dear, my United Kingdom friends, obviously. Italy, obviously. Let's actually go and have a look and ask Grok. Do explain who the G7 is. G7 nations list. Let's have it out. What will the mighty Grok, elongated muskiness's AI, tell us about the G7 nations? United Kingdom and United States. Japan. My Italian friends. No, it's not good. Germany. No, it's not good. France. Oh dear. Canada. KuCoins. My little KuCoins. Up there, thinking you're in the big, wild, beautiful world, heading up onto Alaska. You're going to hide in those hills. No, sir. No, sir. 3 bags full, sir. You are part of the G7 that this lady and the tax consultants are all suggesting will come. There is a distinct Western flavor. You know that guy who kept telling you to leave the West, tax scavenge mode will be coming. You know, you heard it all here first. You do know that it was said, but you thought, I've got time. Well, the time is coming, my friends. The time is coming. California already is wanting to reserve rights to tax Americans that leave the state. And remember, California is America 10 years ahead. For tax for 10 years after leaving the state. So one part of the country is telling they own you for 10 years after you piss off. And they will come for money from you for 10 years after, never mind what state taxes you are also paying in Texas, for example. That is the BS, that the failing debt-based collapse. I told you this is the most significant call we've ever made, and that it has bearing into absolutely everything, and it necessitates tax scavenge mode, which means totalitarianism, because the government has to get more assertive about the fact they're going to fucking rob you. Think about that for a second. They are so bust, they need to get aggressive and rob you. So it's no longer indirect taxation by inflation and overspending. That debt credit card is being pulled back. You can't keep increasing that limit. It's being pulled back. Why? Debt-based collapse, 2020 call, you name it. You saw it first, heard it first, said it first. Technical break, the person who called the beginning of a small technical break up there that no one was interested to, they were all saying buy bonds, wear diamonds. That collapse that's now gone 55% to the downside is everything you read in the news of financial relevance. This post par excellence example. You have the socialist labor, which is communist by decree. Miliband is a communist, his family were communists, and you have complete rip-off taxation policies coming down the chute at you. So you are right to consider Georgia. You are right to consider leaving. You are right to develop residency and optionality outside of your country. It is what we did ourselves more than a decade and a half ago while preaching exactly what we do. And you can use our partners that have already done that work for us very efficiently. All you need to do is email support@themarketsniper to get the details of that which is going on in Georgia. That will secure you 0% capital gains on your crypto, your stocks, and providing you hold your gold for more than 2 years, 0% in your gold and your silver, your platinum, and everything else. 0% capital gains. You see, some countries need some people with means, need some wealth, are small bosses, not big aggressive bosses like the United Kingdom, America, KuCoin, and Australia, where they can shove you around and push you around because you're their little bitch slave, and they're so used to kicking you in the pants and slapping you around. They did CV19 and beat your daughters up for not wearing a mask in a park. They're so used to bullying you and shoving you around and waving their dick in your face. That is where you are at right now. And I'm here to tell you, it doesn't have to be that way, but inertia is your enemy. You have time. You have time in the UK. You have more time than you think. It's going to take a while. They're going to get knockbacks, but you can't hide their intentions. You cannot hide from their intent and their desperacy that is foreboding and is coming for you, my friends. It is absolutely foreboding and it is coming for you. Let's get back to the trade after that intriguing question, that very tiniest little sidebar that took me on one of my usual rants of great vigor about criminality of governments. They will make it legal to rob you. That's a fact. They will make it legal and write up in law to rob you, to tax you on tax you on tax you, because your wealth, they want your wealth. They need you poor. They need you a serf and a slave that will do everything they will command you to do. Otherwise, UBI will be withdrawn, must take medical intervention beneath the skin layer, whichever variety of poison they choose to offer up. No, no, no. Freedom, optionality. I'm sitting here in Panama. There's a jungle behind me. It's a beautiful place. I watched the band, the Latino Verve. I live in a great place, and I'm here for part of the time, and I don't put up with their government crap either. I'm not here 183 days. I live a nimble man of the world, not of one nation, but of many. And likely so, if I dare say so. Anyway, back to the Korean won. And here we go. So if we have a look at this, we're still on the 2 monthly. This is inching up. towards one of the biggest potential trades. This will have some degree of news based on it. It might be Asian news, it might be Korean specific news, it might be North Korea, South Korea news, it might be Taiwan and have a knock-on effect for Korea. It might be who knows. I can't tell you, we can all just guess. It could be a financial aspect of unwinding in South Korea, North Korea, who knows? But something is brewing. We get the trade before the news. We don't worry for the story. The story comes later. We called single-digit oil when we meant an all-time low for the last 4 or 5 decades, and we got it. We found out the reason later. It will become apparent. All things will be revealed. The trust of method, HVF method, that you will learn, watch us implement, and potentially ride the themes with us on a non-advisory basis in our community, if you choose, by clicking the link and booking a call. By the way, if you are a member for HVF method, for building wealth and securing your wealth, you also get the coach, the relocation plan B coach, for free, for no charge. Unlike if you just want to call the coach, you pay $500. But hey, it's safe to just start at $500, have a chat, see if you like the people that they're engaging and if they're sincere. Anyway, so there we go. This is getting very, very close. And if we're to have a dollar surge in strength, I think it could be as much about Korean weakness as dollar strength, but we are getting some dollar strength. So it helps to have a relatively strong currency going now, which has been very weak recently and possibly a touch oversold, against something nation that may have a huge event. By the way, that target, as I said, again, 2,740 with some degree of overperformance. These are big trades. It did say most G7 nations, but how long do you think 1 or 2 holdout nations will be allowed to hold out? So Bear Mountain Rancher, unlike all the other G7 nations, Japan not only has the lowest taxes and the world's best lifestyle, it's also the world's most civilized. I actually love Japan as an idea, and I do consider most of what you said true. I will also point out to you, though, that you may not have realized, is they are in a situation of destroying their currency. They will have abnormally high inflation that will result as a result of that, and they are subject to the bullying nuances at a fiscal level by America. Sadly, because they are beautiful people with amazing manners, and I admire them immensely. Watching from Puerto Vallarta, Mexican peso strong against the CAD. Yes, there's been a lot of embarrassing performances on the currencies. The Hungarian forint has been beating the dollar by about 15%. The Czechoslovak krona, the Russian ruble, 42% up over the USD. So much for those damaging sanctions. Yeah, we're winning here. That's it. The only people are losing are the people that were buying Russian energy that no longer can and are now buying it for 3 times more from America and via India. Oh, that happens to be the United Kingdom and Europe. Good job. Good job there, my European friends. You're all being destroyed. Your inflation is high. Your cost of living is being marched up through intent, not incompetence. You think they're all incompetent? They aren't. It's intentional. It's not going to be pretty anyway. So there's truth to that. Let's be frank. A massive collapse in the wealth of the European nations of the West, G7 countries apart from Japan, of course, which is not a European nation, is going to have a knock-on effect globally. But certain other places are going to receive cash flow in and capital in and huge entrepreneurship, and we have huge upsides on a number of markets that are in the East with macro setups that are going to fly, that are going to be building wealth, that are going to be building, whilst the fiat debt-based collapse affects the hegemon worst and foremost, and all its allies that have tied itself to the same mast. So you can choose whether you want to be in zone 1 of the center of the earthquake or out at zone 8. The earthquake hits everyone, but I'd rather have a ripple and a tremor than fall down a crevasse with an entire building. Thank you. So, yeah, give the thumbs up, shouts Perio AZ New Homes. Yes, yeah, thank you, Mr. AZ New Homes. 423 of you watching this time of hour, and we're hoping that we're getting a couple couple of likes. Somebody appreciates that. We've got a lot more to tell you, so we better get on with it. 189 likes. Great. So what have we done? We've done the dollar index. We've done the Japanese yen. We've explained to you why we feel technically the dollar index is going to go back above 100, have moderate strength, maybe possibly outlier quite strong surge of strength. If it is to do that, which trades we would have on in the FX market. And we've also told you and updated you on Rachel Reeves of the United Kingdom and why you should be making a plan B and having a relocation coach that could support you throughout that process. And give you the best guidance available in neutral markets as to where the best countries are for doing exactly that, and where we have support and community members and unique people that have fulfilled, and honestly at good prices. So with that all said, if you want to hear more, email support@themarketsniper. So after the USD Korean won, let's have a little look. If we are expecting that little bit of firmness, let's go and have a look. I think the Australians are up now. I want to show them why their mortgages are going to get expensive. And it's a pity, you know. I love Aussies, Aussie, hey, we're all good. But unfortunately, this is moving up rather quickly now. Let's have a look. There we go. This is your upside setup on the Australian 10-year. The upside setup on the Australian 10-year, let's take that one away. We only need one. You can quite clearly see you've been in an uptrend. That's where it's come up from. This is your squeezing. You've been in the low end of this barrel. You've been in a range now. You've been in a range. And you did a little test to the bottom. And my expectation is you're going to get into the top half. And that's when things get problematic. You could have a breakout. You'll get to that first interim at about 4.85%. You'll move higher. At some point, you'll get to that 5%. That's going to be very psychological. After running the 5.07, you'll probably have a pullback. Oh, we don't want 5% rates. Oh, and guess what? You end up with 5.75 rates after a pullback. So that is going to be very, very debilitating for Australian property market, one of the most extended property markets. I think Canada is one of the worst, but I think Australia is not too far behind. It's also going to put a lot of pressure on business in Australia, a lot of pressure on business and borrowing. It's not just about the housing market, although there's a lot that goes into the housing market. Debt-based collapse. That is part and parcel of the debt-based collapse. Rate going up, value going down. Okay, let's go and have a look, because after all, we said in the title, dollar strength covered, Korean won yen weak covered, Aussie 10-year covered, Aussie debt spike. Gold is the next one. Let's not hold you back any further. Let's jump straight into the yellow metal and why I think you still might have one more sell-off to come. So we're going to drop a time frame, get it down to the daily. Let's switch some of our labels off and highlight what I have a little look, see what I think. I'd like to be wrong on this, but I do just think there's a little bit of staleness to this rally. It's not been overzealous. Typically, you get selling in waves of 3. Now, that was a double top. We'll just show you the technicals on this last piece of price action. That was a double top that gave you a target down here. So you can see 2 highs there. That was your neckline over there. And that, of course, was your target that ended up getting made over there. You then had the inverted HVF. That is a downside structure that wound up. It looked like that. And we drew it, we called it, and you got another leg down. I've drawn it on previous videos if you haven't seen that, and that gave a target a little further down over here, and you've since recovered a little bit. The problem with this, there's a possible problem with this. This may well be a rising wedge, a little bit of a rising wedge, and we've had one big sell-off. That was actually the worst part of the sell-off. That was wave or leg 1. That was continuation pattern 1. That was wave 2 of the sell-off. Wave 2. I'll do Greek 2. Looks like a Z. Wave 2. And now you're probably in another continuation pattern. There is one way we'd be wrong on that. There's one way we could be a little bit wrong. It can extend a little longer. For example, that could happen and be an upside, and you blast up to the high side, and then you go back into the wedge, you go a bit further, and then the break happens a little later. But I think it's a bit too soon to be calling the bottoms. This looks like you could still get our third leg of selling. By the way, the first was the worst. It had the most momentum. The second didn't go as far, and it was not as steeply down. So it does point to momentum reducing. You could have a sell-off, and it barely makes the same low, and you could end up with a double bottom. It could come off slowly as a sell-off, could come off quick. You could have a snapback really fast. So you could have something like this. Let's do a number of combinations and permutations exist with this, by the way. So let's go a nice fat Koki and do the blue. There's a number of ways that this could turn out. But let's say you did go there. You could have a slow down leg and a fast up leg, and then end up with a double bottom in due course. Then you've met the third sell-off. You fail to make a new low, or you make a marginally lower low, not much different, that it still counts as a double bottom. You come back here, you have a small return at the neckline, and then we're back at the races for the upside. That's going to be amazing. That could be a moderate selling off leg. That would just bring us back down. You could have a new low. If we don't do this as an upside squeeze, for example, you could do this and break down here and make a new low, but not significantly so, then start a rounded bottom and recover. But there is a third leg I still think that can happen. That can happen. When do we say we're probably wrong on that? If you get back into this previous structure over here, if you get back into these levels without that selling leg having taken place, you end up in quite a firm, you end up in quite a strong position. So let's cover that. You always should ask, how do we be wrong? The way we could have a reversal and be wrong is if this starts slowly like this and is looking a bit sick now, but there's suddenly some vigor, and then you dart up here, and then you have a small pullback for a shoulder. You could have a right shoulder, that could be a head, and that's a reversal structure that could happen like that. But we're requiring an out of the blue degree of momentum where we're not really seeing that so far. That bit of momentum was rebuffed, just almost as strongly. That bit of momentum quite largely rebuffed. So you're not having it all your one way. You are making marginally higher highs, but now you've had this failure to make a new high and you're already in a back down. So there is some form of something happening here. Will it be down? Will it be up? I don't know. But my suggestion is potentially one more. Bear in mind the dollar is going to be blowing into the face of gold instead of behind it when it was weakening as much as it was. So sometimes it's good to have a look at the gold market in terms of other currencies. So what about the euro? How does it look on the euro? It should be, if the dollar is getting firmer, a little stronger, a little bit less soft. You see, you've got a little bit more high side here, but still not overly dominant. Still not overly dominant there. You got a little bit of a technical top. Now, that is also higher than that. So it's not really going to be an HVF. It's running into a little bit of technical resistance short of this range. It's running into, even though it is higher. Now, one of the weakest currencies recently, the Japanese yen, the gold should look almost not too bad. But that's not the currency that is the most important, unfortunately. JPY. Let's have a look at gold JPY. And you should actually, it also hasn't yet made the previous high. It's a bit softer here. It had more upside in this phase. It's also come a little bit down. So gold has come off across all three currencies reasonably at this level. So it's also, you know, what's it going to be? Is it going to be a top? Is it going to be a squeeze and down? Is it going to be a squeeze and up? What's it going to be? It hasn't even against the weakest currency made these levels back again that were over here. Where that flag was, and that would be the beginning of some proper bottom. So I would still say there's a decent chance of a further selling leg on gold. Silver wants to be up, but it's going to respect the king, and it will come off a little bit. And platinum too, to a degree, although I still think platinum is going to be one of the relative strongest. If gold goes down a fair bit, platinum probably not much more in percentage terms. Silver might go a tiny bit more. So now we've covered the gold. We've covered the dollar strength. There was something else we were going to tell you. And did we cover it all? That is the question. Let's have a look at some of your questions and your comments. I am getting an advert. That's not allowed. That's not allowed. Adverts aren't allowed. Let's have a look at the live chat. There we go. Too much code for me, but I'm curious, says someone. I have a few potato mines also, kind of hoping they don't end up earning me silver. Sniper, what the hell is happening in the repo market? So we spoke of the Cayman Islands and we spoke of the repo stress that brings. So the more the government borrows, the more they are providing bonds that need to be bought, the more the hedge funds, CIA holdouts, by the way, they're betting the whole system. They'll break the whole system. So they will privatize their gains and socialize their losses, as they did in subprime, as usual, so that you pay in the dilution in your fiat for their bailouts, and they make the profits in their good times. So those hedge funds are draining the repo market because they are borrowing such immense amounts on a 24-hour cycle that they are each morning putting in the request for the next loan on a day-to-day basis to have the funds to lever up to actually make a reasonable return out of the marginal profit they make on shorting the futures on treasuries that always start higher up than the cash market and holding till the delivery date. And it is not a risk-free trade, and markets do go into backwardization. And when that happens, it is having an effect, the degree of leverage and the amount of buying. 37% of all foreign ownership of bonds is hedge funds. You're talking more than a third of foreign holdings, which is 8 trillion foreign holdings of US debt. And again, the size of these numbers, friends, I mean, count to 1 million, 12.5 days, count to 1 billion, 32 years, count to 1 trillion, 32,000 years. 32,000 years. Show me history from 32,000 years ago. Anyone, how many generations would you have to have kids for to be around for 32,000 years? If each generation was a 60-year cycle, 32,000. Wow, you'd have to knock 1 0, so it'd be 3,200, divide by about 6. Oh, jeez, I'm battling with the maths. It's going to be about, I don't even want to say. It's going to be about 640 generations. It's unbelievable. It's just non-feasible. And there's 8 trillion held by offshore, of which 37%, over a third, going for 40%, let's call it 40%, it'll get there in due course, don't worry, is going to be 10 times by the 4, wow. So you're talking about 3.2 trillion, of which 1.8 trillion is in the Caymans, one tiny little speck, 3.2 trillion, man, oh man, think of all those generations. Anyway. Yeah, secure the bloodline. If we go below 3,900 USD, so let's have a little look at what is being implied. I'm going to go back to the gold worst case scenario. How far down might it go? And we'll go with Oanda. We'll clean our face. I'm going to hide all my lines, and I'm just going to say, okay, what do we have? So we have some bearish point in figures projections. This is somebody else's tool, not mine. What would be the worst case scenario on a downside target? I don't think all of these are going to be on. The worst is 3,650. I don't think that's it, but it might be. I think 3,887 could in fact be on a down leg, and that's why I was talking about the double bottoms. So all these bullish targets have been met. Many of them have been achieved. We've just got those 2 bear legs. I think that one can be done, 3.8, which is a speck lower than it's already traded. And that'll give you a perfect double bottom reversal as well if it's made. A little bit through and then back up. The point and figure, pretty decent. I like the fact that they get targets. HVF method targets are superior, but it's useful to have point and figure ones as well. We don't have a pattern in here that we can project for, so point and figure is what we've got. So I think a little rollover one more time. But that doesn't mean that has to get done. You know, if this is an upside break and we get back up to range, I would say the odds of it being done by the time you've run 4,160 or you're even in this range again, it starts to get bullish again. It starts to point to reversal structure. But that would be good, and then a bounce back nice and strong, a nice double bottom, and then a move up to here and a shoulder, And I think we'll be doing just dandy then. We'll be getting back up to these levels, and then maybe we'll rest again and wind up like we did for April through to September, just a smaller version of it. We won't have to wait that amount of months. And that will be most welcome. So that's a little bit more for you on the gold. I'd love a few months of downside in metals, back up the truck. Yes, I think for investors, you should do that. What is the single most bullish catalyst for gold that could happen? Asked Stoic Barbarian. The most bullish thing that could happen for gold, I think the debt-based issues. So the debt contagion on debt-based collapse. So were you to have, for example, a massive move to the upside in rates, which is pointing to a disorderly decline in bonds, the money that is leaving bonds would almost certainly go largely disproportionately to gold. So gold is an inverse bond trade. Let's put it that way. And the fact that rates are starting to go up, and furthermore, if you get data points showing higher inflation, that's going to be very hard on bonds and very good for gold. Gold doesn't need the inflation. The debt debasement is enough, but debt debasement is fiat and debt collapse. And it is the alternative asset. It was the original asset, but it is now considered the alternative asset, and it will do exceedingly well on that. So let's see what other questions you have before we wrap. We can stop sharing screen for a bit unless we get a technical question. What other questions do you have for me? Let's see. Then I'll buy a truckload. Yeah, good. I think that's a good idea. I don't know if we will see 3,500. I'm not sure. Francis, remind me, everyone, that there's no full cycle debt crisis until we've returned to barter. Yes, I think you should do barter now, in fact, with anybody who's a friend. And I think you should pay cash now and ask for discounts for paying cash. And you should encourage those said people to not be paying unnecessary extraction to a system that is actively undermining their cash, for which actually they're paying tax upon tax upon tax. As you can see, our friend Rachel Reeves is all on the take. She's never had enough, along with all her friends. Remember, they're not interested in you getting wealthy and getting free. They're here to ensure you don't get wealthy, that you don't get free, that you remain a captive serf, that you work your whole life until they terminate you through the medical, pharmaceutical, or the military industrial complex. That is how they operate. They're not your friends. They're farming you. You're animals. You're being reared to be eaten. You're being reared to be terminated. The Wall Street is a magnificent marketing department for a slaughterhouse. That's what the facts are. And it's not just Wall Street. Your secret services, we've been binge watching the James Bond. What a suave man they make the dark state guys, the field operatives, legends, fighting tooth and nail to protect country, morally good people. It's absolute nonsense. The Bond movie franchise of Daring Do and Yippee-ki-yay and God Bless the Queen and all of that hula hoop nonsense. There is nothing honorable about the dark state. They actively run their flock, and they sometimes thin their flock by making them fight other people's flocks, helping the other dark state to thin each other's populations out. That's what they do. They like to do that. America wants war with Venezuela. They tell you it's for the drugs, they say. Really? If they were worried about drugs, why have all the Ukrainian soldiers got no ammo but plenty of drugs to keep fighting? Why did the same family sell opium to China? Why? We wonder. It's not about drugs. The CIA, the only reason I don't sell drugs is the CIA hates the competition. I wouldn't dare. They kill their competition. It's not a field for me. It really isn't. No matter what the margins is, apart from Freakonomics saying that the average drug dealer lives with his mom in the basement, and the whole notion of being rich as one of the men on the street is an absolute delusion. Of course they don't. They don't make the foot soldiers rich for their army. They never have, and they never will, even though they're taking more risk of being shot by a cop. Venezuela has been taken because of a resource grab. And they have a Nobel Peace Prize laureate begging the Zionist cartel, promising support for Israel, promising resources to Exxon and Mobil on their return to extract, for which America has a very long-standing track record in Latin America, as I sit here in Panama, as they celebrate their independence from Colombia and also from America and Spain. And every nation in Latin America has had democracy exported to it, with a leader that fell out of a plane or whose plane crashed after throwing out the cartel of Rothschild's resource extractors, who were polluting the Amazon, who were pumping chemicals everywhere, who were destroying the government while selling you green taxes to stop you from flying. Green climate change is entirely a tax-based mechanism to restrict your freedom of movement and to make it only something for the elites. They're going to rein it back. Discount airlines, we predicted in the long run, will die. That is the truth. They have never cared for the climate. They tested atomic bombs on islands. They pumped Agent Orange over the Vietnamese, poisoning soil, leading children to be born defunct. They've done every single thing. The CIA under Kissinger, the NSA, the dark states, they aren't James fucking Bond. They are soulless motherfuckers. Okay? Soulless people that are absolute murderers, that are vile, have no backbone, and make politicized decisions of great cruelty. They are child traffickers, they are organ traffickers, they look away from certain crimes if you're part of their cult. They are criminal, they are Israeli, they are controlled by Israeli, they're controlled by Mossad. Mossad controls all the dark states. They spy on all the dark states, they spy on all the leaders, including Boris Johnson, when Netanyahu put a bug in his shithouse. That's right, that's a true story. Everywhere they go, they spy and they murder. Spy and murder is us. It's not James Bond. It's not the fantasies they sell you. Satoshi isn't a real person. Satoshi is an NSA project. It has always been criminality. They will never let you have your own money. These are hard facts. You live in a captured new world order already. Get used to that fact. You are farmed. You are cold. Everything is done to you like a flock. You have to secure your freedom. Get out from under their systems. Have freedom. Have real choice, have optionality, and live your best life in punishment of them. The biggest punishment is living a long, healthy life, paying very few taxes. That is how you punish them. Refuse to be got down by all of this. Reject their marketing of fear in all of this. The way you punish them is you laugh in their faces at their fear-mongering. You refuse to be psyoped, and you refuse to pay every tax, and you contact us on support at the Market Sniper to ensure you can legally even do that. Because the mechanisms are there, they're doing it too. Only stuck in the mud, inertia people get raped and sheared and then show up the next day for the next round of battery and abuse. How much longer are you going to eat their crap? I ask you with tears in my eyes. Time to build wealth, time to preserve that wealth, time to have freedom and optionality. It's actually beautiful in many places in the world. I'm sitting in one right now. I will move to another one just now. Everywhere I live is beautiful. Everywhere I'm happy. I have motorcycles in every single one of them. I've got 2 in the basement down here. I haven't even had time to ride them. I've got a great lifestyle, thanks to you. And by the way, we're almost at 100,000. And I'd say thank you to every subscriber that's helped us get to that number. And if you want to help us by subscribing, we appreciate it. If you want to send the channel to anybody else, we appreciate it. But I'm here to tell you of a few hard-hitting fundamental truths. And this is how every YouTube needs to end. The environment you are in, if you are in a G7 nation, is going to be contrary to your health, wealth, and quality of life. I'm telling you that as a fact. If you want to sign up for hardship, do the inertia thing and stay where you fucking are and do nothing. That's a fact. the Western world, G7 world, is a sinking ship of tax extraction, totalitarianism, inversion, perversion, two-tier policing, and every single thing else. You'll be arrested for your social media posts while immigrants stab your daughters on trains. That's what's going to happen, and get off for cultural misalliances and misunderstandings. The police will show up at your house within 5 minutes for hurty words. They didn't respond to the recent stabbings in the United Kingdom when a guy showed up with a panga in a barber shop. They didn't respond. He was let on a train, and him and his mate stabbed 10 people and a 14-year-old boy. That is who is looking after you. That's how they look after you. Your country is turning into a shithole in front of your very eyes. I'm here to point out the obvious. You can decide. Those third world countries you told that were so tatty and third world, you have a safer and better life. People aren't being stabbed on the streets. In the good areas here in Panama, they aren't being stabbed on the streets. Where I'm staying in Cape Town, they aren't being stabbed on the streets near Limassol in Cyprus for part of my year, or Georgia, which is very homogeneous and far less infiltrated with the stabby variety of people. Hey, friends, I'm here to tell you, this is where the world is. You are a function of the decisions you choose to make right here and right now. And by making no decisions, you've made the decision of inertia, and you are going to get full throttle what they're going to bring to you. That is a decision. Mark my words. You're making a decision one way or another. And staying where you are in any of the G7 or Western world nations is a macro decision. We have got a major YouTube influencer that we may do some content with physically, who is coming for plan B, plan C here, who thought she had all her plans in place in America and has decided something outside of the legal jurisdiction might prove useful. Other people are waking up. Don't be the last. The exit taxes will all be law by then. The 10-year clawbacks will all be law by then. Giving up your passport in America will all be law by then. You will be locked in and left with no options in due course. The cage is shutting. Ensure your nomad capitalist existence and your fluidity in reset times right here, right now. Here I preach it to you. Listen to these words. This is wisdom. I tell you, I've thought long and hard of everything I've said. I've thought it over from every angle. How do I be wrong on this? And every news headline keeps affirming you are right. Keep preaching, you are right. It keeps coming, you are right. It keeps happening, you are right. The cheek is getting further, you are right. The inversion, perversion, you are right. The two-tier policing, you are right. The clergy plan, you are right. Everything that other people have also said, I'm not about me being right, that it's seen, that we are acknowledging. Be an observer, be a noticer. This is happening. It is happening to you now. It is happening to you now. You will be in your final years as a pensioner, when you're sitting 10 last gasps before you die in that rocking chair. You'll either have a good nurse and family around you, leaving great means, having lived a glorious life, or you will have suffered, fought, been robbed, hidden in your home, and watched a nation that you were born into turn and decline. Terminal decline. You will suffer every blow like it's a personal one. You'll watch places of your childhood rot like hell. You can choose to stay, and you can choose to be one of those guys who thinks he can fight a system that has weaponized the media, weaponized and paid off the politicians, weaponized the judges, weaponized the police, weaponized everything. You think because you have children you can't move. I'm telling you, the children are more adaptable than you. And you can adapt. You are sleeping, and I'm here to wake you up. You will act or you won't. This is a totally optional message. But hear me now with all these things, all the Korean won trades, the yen trades, the everything trades, the gold trades. You will not even keep your precious metal gains if you are in these countries. I'm telling you, they will come for you in every possible way. I am warning you. Be warned and hear this now. Move where, he says. There's two parts to the question. One, except you have to move. That is completely segregated part. One. Two, take action and have a discussion about where to move. Book the call, talk to our team, our specialist team members that will give you all the options. You are unique. You might be in Canada, you might be in America, but you first have to accept. If you say, oh, I don't know where I'm moving, therefore I won't do part one, I'll stay here and inertia it. That's what most of you are doing. You're saying, oh, I don't have the perfect plan, the runway for the next 25 years of my life, and which country, and what car I'll be driving, and how I'll have a car license and all that. All that is detail that gets sorted out. I look at what I've achieved, and we've taken it on as they've popped and arrived. Licenses, homes, taxes for properties, this here, furniture, this, that, everything, parking lots, what to do, pay here, phones in different countries. It all gets sorted out. It starts to get sorted out when you take action. You will overestimate what you'll achieve in a day and a week. You'll underestimate what you achieve in a year and 3 or 4 years. In a short time, I've exploded in property in different nations. I literally have right down to firearm licenses in most of the countries, right down to car licenses, right down to everything I want in every single country, including social clubs, other places. You can do it all. It's all just excuses, saying, but where? But where? Out. Out's the answer. Start talking to people who'll tell you where. It's a paid for service. It's real quality, and it's individual for you, where you're coming from. Americans have certain restrictions. UK people have certain restrictions. People have. Start the process and answer where for yourself. But if you ain't booking, you aren't doing, you aren't advising, you aren't starting your holidays, every holiday you take should be moving you towards that eventual goal. You should be stacking metals in other countries. That's why Bullionvault below is your gift. You can stop stacking in the UK or America, and you can start stacking in internet gold, and then you can sell it all. You'll get the upside of gold's next 2 years moves. You can buy it and have it physically delivered to you in your new homes in multiple different locations, that you will have more properties than you imagine because you stop paying ridiculous tax to criminals and pedophiles. How about that as an idea? Stop paying taxes to a blackmail racket of criminals and pedophiles and keep more of your own money. What do I have to say to any one of you to open your ears and start the process? Wake the fuck up. Stop feeding the monster. Your inertia is feeding them. And they're coming for you, and they will gobble you up, and they will need more and more and more. And they will take just about every drop of wealth that you have and leave you with a mortgage to pay. Can you not see it? That's it. That is it. That's what you need to do. I'm done. I'm going to go get some sleep. We have a guest tomorrow. You might find out who it is. Thank you for supporting the channel. We appreciate the shares. There's 504 of you watching. There's 297 likes. That means 60% said thank you, which we truly appreciate. It fools the algorithm. Don't forget to share it, and I'll catch you next time. Bye for now.